Hey everyone, it's Mike Baltos, and this is the Orderflows market analysis for Friday, July 28, 2017. So the Dow ended up with a fractional gain, I think, a very small gain, but more importantly, it ended the week up about 1.2%. Crude oil ended up near $50. It had a very strong gain on the week as basically Saudi is talking about output cuts. And today, on Friday, you had the second quarter GDP hit expectations at 2.6%, consumer spending at 2.8%. We're seeing strength in business investment offsetting weak showing for housing. So, and all that means is, it means inflation is low, posting only about a 1% pace in the quarter, and trends are pointing to the 2% full year GDP target that the FOMC expects to see this year. So, everything is going smoothly. Thanks, Donald Trump. No, just kidding. But before I jump in, looking at the charts, brief disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So the tools I use in this presentation, as usual, are the Orderflows Trader and the Delta Scalper. Orderflows Trader is the volume footprint chart that you see in pretty much all my slides. And occasionally I do show bar charts, for ease of explanation on an indicator like the Delta Scalper. But the volume footprint chart is a great chart. You'll be able to see what's really going on inside the bar, the struggle between the buyers and the sellers. So let's take a look at a chart. First chart up that I want to talk about is the Emini. It's the 10 range chart, and it's disappeared on me. Hang on. Okay, so here it is. This is the Emini S&P. This is the 10 range chart, and every day I talk about ratios and divergence. A divergence is when you have a new or equal low and positive delta, right? You're in your low, you should be expecting to see a negative delta, and that's why you have a divergence. Now, the ratio is something a little bit different. It reads the order flow and it outputs these numbers here. You see 0.82, 272. Some are black, some are blue. Now, if it's blue, that's a ratio that I like. Okay, it's telling me, there's something interesting in the order flow. Either there's price rejection or price defense. Now, one of the trade setups that I talk about almost daily occurring, I see it every day, and I talk about it, in these videos, is when you get a divergence here. That's this green arrow telling you there's a divergence in the market right now, and then look for a blue number here. Now, when you have a divergence, if you don't get the blue number in the bar with the divergence, look to the next bar. Okay, if you have a ratio there, I still like it, because sometimes for whatever reason you may not be able to get the actual, a ratio that you like, at your low or at your high. But, again, ratios are signs of price defense or price rejection. So, if I have a divergence, okay, to me that's already a sign that the market could be changing. So what I want to look for is signs in the order flow of price defense, meaning, this low is being defended with heavy volume, or price rejection, meaning lesser volume in the order flow, that prices down here are being rejected. So you don't get a ratio here, but you do have the divergence. In the next bar, you've got the ratio bounds high. There's two types of ratios: ratio bounds low, ratio bounds high. One indicates price defense, one indicates price rejection, but I treat them the same whether it's ratio bounds low or ratio bounds high. Really what I'm looking for is the blue number to tell me that there's either ratio bounds low or ratio bounds high. And we're starting to move up. We got the divergence, and then I see a sign here of price rejection down here at these lows, and the market pops up. It makes a nice little move from 66 all the way up to 69. Then you come up here, you see a bearish ratio. You got price rejection up here, Delta Scalper kicking in just after the swing high, and you sell off. You sell off down to new lows. 10 a.m. you get another divergence, no ratio, it's just a black number. Then you get the ratio in the next bar, which is again indicating price rejection. This is a ratio bounds high. And then the market just continues to rally. Again, from that same area, 24.66, all the way up to where we closed at around 24.71. So, there was actually 3 nice trades here. There was the first ratio and divergence, which was good for a couple of points. Delta scalper was also good for, something. I don't know what you would have got out of this. It just sort of went sideways before it gave another buy here. And at 66, all the way up to 70. So, there was points to be had. And, that's why I talk about points in the S&Ps rather than ticks, right? A lot of people are trading with DOM, they're just looking for the next couple of ticks. Would you rather be trading for ticks or for points? I think it's better to trade for points rather than ticks. All right, so the next market I'll talk about are the 5 years. And again, same thing. I was talking about ratio and divergence, either, ratio and divergence on the bar or ratio and divergence and ratio on the next bar. So, and how to manage the trade. Okay, so here you got a ratio 0.57 and a divergence, and it fails. Why does it fail? You've got a bearish ratio immediately after you got your bullish ratio. Now, it's about the thing about order flow that is useful is you could be reading what the market is telling you, right? And so you're taking a trade, you got a bullish sign here, but then you get a bearish sign right afterwards. Don't stay in the trade. Get out. There's nobody has a gun to your head saying you got to stay in this trade because you got a divergence and a ratio. If the market is telling you, it comes right back with a bearish ratio and you got multiple imbalances in the bar, it's not a good sign that this trade is going to be working out. Really what you want is the green bar afterwards. You want buying imbalances, not selling imbalances, not a bearish ratio. And you can see how the market makes a new low. Now later you get a high up here. Granted, it's 736 just after the number. That's fine. This market's kind of quieted down for now. Divergence, no ratio in the next bar. You just also have delta scalper kicking off there as well. And the market circles back up to the high of this bar, one tick higher, a bearish ratio as well, and the market makes a nice move. So this first trade that this morning is a loser, but you could cut your loss here. You don't have to go let the market come to your stop you out. You could get out here. There's plenty of volume to get out before it breaks lower. Then you got a nice trade here. Everything is confirming. There's no reason to be getting out of this trade as it pulls back up here. Your stop is up here at around the high, and it makes a nice move down, from 04 down to 00. Then it rallies back up, and boom, boom, the ratio and divergence. This one fails, but it comes back again. Like I say, watch what's happening. You got a bullish ratio, right? You don't have a red bar. You don't have a bearish ratio. You don't have anything following up on it. That's how you know to cut your loss here rather than let it stop you out up here. And then again later you got the divergence and the ratio afterwards. Market really slowed down after 11 a.m. Just sort of went sideways on you before closing here at 4.25. So that's how you trade, right? You read what the market's telling you and you react to it. You don't trade based on, oh, I got a buy signal here, I just got to buy and let the market go to my either my profit target or stop me out. No, if you're reading something in the order flow that is telling you, hey, it's changed. Here, even though you have this bearish sign here, over the next several minutes, conditions changed in the market. That's the thing that a lot of these quote trading indicators out there lack is they don't tell you that, hey, the trade's not working out. You're just supposed to take the trade and let it go. But if you're reading the order flow, you can understand what's happening in the market and react accordingly. Get out early rather than let it stop you out. Okay, so next market I'll talk about is the Eurocurrency. Now again, this is sort of goes back to I should create a special section on my website, preaching to the choir. Again, it's the same things. Again, it's not rocket science. It's not rocket science. I try to make order flow as simple as possible for people. And again, whether people want to use the tools that we develop or not is up to them. But again, maybe I sound like I'm drinking the Kool-Aid or whatnot. But, again, these are the things that, occur every day in the order flow. And if you don't know how to look at it or even want to look at it, you're just basically leaving money on the table. Now, again, this is if you just read the delta, okay, forget indicators, forget ratios, forget all that stuff, okay? Maybe you don't believe in that, fine. Read the order flow, read the deltas, as you're going up here, right? Watch when you get up to the highs. What's happening at highs is what you want to know, right? If we get up to a high, are we going to sell off or not? What's going to happen? Are we going to continue to go higher, go sideways? You want to be taking trades that make sense, okay? A lot of people, again, a lot of people trade with indicators. They don't give a shit about what's actually happening in the market. It's, oh, this indicator says sell, so I'm going to sell. But, read what's happening in the market. Now, so here I'll give you a quick lesson. Delta, make a new high, strong positive delta, 273. Yes, that's what you want. Got a new high, got weaker delta. That's not good. You're on your high, you got a weak delta, very weak, 19. I'll say very weak, but it's kind of a neutral, right? There's sort of a range I consider delta to be neutral in, meaning it could go either way very easily. And 19, generally it's less than 50, but in contracts like Eurocurrency or contracts that trade less volume, it's probably lesser. It's probably around 25. But so 19 very easily could be the difference of one trade. Okay, maybe if there's just a little bit more volume here, someone was bidding an extra 20 lots here, boom, you'd have a negative delta. But it wasn't. So to me, it really sort of falls into this range. I mean, but still, nevertheless, it's still positive. Okay, you're at your high, you got a small delta, 19. So you got 273, 98, 19. What's happening? You're going higher, yes, but your delta is getting weaker. So it's telling you net aggressive buyers are declining. Then watch for the bar after the high. Boom, negative delta. So you got weaker negative delta coming up to the high. Sorry, weaker positive delta coming up into the high. You make your turn. You start trading lower. The bar closes lower than where it opened on your high. Next bar, got negative delta. So you went from strong buying as you're breaking out to new highs to weaker buying as you're going a little bit higher. On your high, you've got very weak buying, very weak aggressive buying. Then you're starting to come down. You've got selling taking over. Okay, that's a sign that, hey, you know what? We're shifting. Okay, sellers are coming in. Next bar, what happens? A stronger negative delta. So more sellers are active. Now that's your sign to be getting short. Delta scalpers picking it up right here. That's this fuchsia color thing zone. Okay, so you've got a perfect reason, just based it on the order flow here, order flow of the delta, to be getting short. Okay, and where are you trading right now? You're trading 117.38. Okay, what happens? The market sells off. It comes all the way down to down to, what is that, 22, but it sort of bases out in here around the 25, 26 area. So it's a decent move from 38 down to 26. That's over 20 ticks in the it trades in half ticks. That's a decent move there. And that's just by reading the order flow. Simple stuff. Okay, so now let's just talk about some other things. You get this high up here. You got trap traders. That's this red arrow. You got a bearish ratio as well. And what happens is that's why these tools, I don't like to call them indicators. I prefer to call them tools. This red arrow is a tool that tells me there's trap traders up here based on the order flow. It's not an indicator. I still like to look at what's happening in the market. And you got people trapped up here at the high. People are long and wrong, and they got to get out. And you see how the market sells off like that. People always talk about what trap traders are, but when you have trap traders, you got to look at what happens after traders are trapped, right? When traders are trapped up here, generally the market's going to come off. That's when people talk about trap traders. They're stuck. They got to get out. And there was something else. Okay. Yeah, you got a high. You got a divergence, but no ratio. No ratio in the next bar. Granted, it's at 730. New highs after the number. Again, this is 731. Even though it is a divergence and a ratio afterwards, again, I'm not going to be trading when the GDP comes out. This is at 7:31 in the morning. It came out a minute earlier. Market did sell off this. I mean, I could sit here and say, yeah, see, I told you ratio and divergence, but I got to be realistic. I don't trade during the numbers. Okay, and honestly, I think you'd be a fool to trade during the numbers unless unless you're privy to what the numbers come out at. But anyway, market had a nice sell-off. You're getting some, delta scalper sell here before it turns around. And, I wanted to talk about this. There was a high here somewhere, if I can dig it out. around 10 or so. Yeah, here we are. So we're coming up into this high. You got a new high, you got a divergence, and you got a ratio, zero print. And what happens? Again, ratio and divergence, ratio and divergence. You hear me talk about that, you know, almost on every chart. Why? Because it works, okay? And boom, you get a nice sell-off here from 89 down to 79 really quick. So again, you know, I talk about these things, ratio and divergence. You're probably sick of me thinking, oh, you put them in a fucking straitjacket. He's, you know, keeps saying ratio divergence, but it works. You know, it works. All right, so I'll talk about crude oil now. You know, crude, black gold, XST. So, you know, in the morning, you got delta scalper buy, delta scalper sell. You know, get some little moves here. It's 4 in the morning. Okay, so we start making new highs. Got some failed divergences. You know, delta scalper didn't work out there. You get up to this high here, 930. You got delta scalper and delta scalper right afterwards. You know, I mean, again, I'm not going to say, oh, you got a delta scalper afterwards. You know, it's more powerful, but you know, I like when you get delta scalper sells near highs or delta scalper buys near lows. You know, you had one here that didn't work out. Okay, fine. You know, it's not the end of the world. Look for your next trade. You know, then you get a trade here. You get a nice little move down. Not the greatest trade, but you know what? At least you're getting a profit, right? I mean, you know, we all like the moves that go from their high to your low, but sometimes, you know, that just doesn't happen. You know, that's why I always say, you know, you can only take what the market's giving you. So if it's only giving you, you know, 15, 20 ticks, then, you know, take it and be happy and look for your next trade. Okay, so lastly, I'll talk about this delta scalper really quick. It's a Eurocurrency 5-minute bar. I'm going to do a separate presentation on the delta scalper, but, you know, just give you an idea of, you know, how it looked this morning. You know, 10 o'clock last night, you're getting a sell, you get a little bit of a move, not much, you know, I mean, it's Asian session Friday, you're not getting much here, you get a little sell here, this one, nothing, this one, you get a nice move up, you know, from, what is that, I don't know, 27, 28 up to, you know, 40 something, you get a little sell here, then you get another buy right here, this was a nicer buy here, around 6 in the morning, again, I'm not going to say hold the position through the number. Right after the number, you get a sell. This sell didn't work out. Then you got another sell up here. I don't know what time that is, 10:45. You know, that's not a great move, but you know, it's I said, you know, there were some nice moves, some lousy, I'll say some not lousy moves, but you get some nice big moves and some smaller moves. You know, it's just a function of what the market's doing. On that day, you know, sometimes you're gonna get big moves, sometimes you're gonna get smaller moves. Okay, quickly, again, I'm gonna do a separate presentation on the delta scalper charts, but you know, really quick, Nasdaq. Again, you know, this is at just before midnight. You had a little buy there, nothing special. All the activity happened during the day session. Here, 8 in the morning. After 8, you're getting a couple buys. Don't really work out. This one, first one, no. Second one, not really. Cash opens, get a little sell here, didn't really work out. Then you make your run up to 59.05. Delta scalper gave a couple of sells right up here, and you know, this was a nice trade. This sell didn't work out. This buy, okay. This buy, nice little buy here. This one, nah. This one failed here. The second one, again, it shot up before broke down, but again, you know, trailing your stop, and here you get a nice sell. This area, this was a difficult area here. This one, I don't like that poke through here, but you know, before, you know, it poked through, rallied up, came back down to these levels, and made a nice rally. You know, that one I think most people would be stopped out on. You know, then later in the day, not much, just you know, I'll say a bit of a struggle, but you know, you're getting little pop-ups, you know, a couple bars in the right direction at a minimum. But anyway, you know, I'm going to do a second presentation on the delta scalper after I finish this one. Okay, so thanks for watching this. To learn more about the trading software Orderflows, go to orderflows.com to learn more about the Orderflows Trader, and deltascalper.com to learn more about the delta scalper. So thanks everyone. Bye bye.